Peter McGuire joins us on a phone line, Chief Market Strategist at FX Global Capital. Peter, great having you with us on Profit. What do you make of the euro? There's been quite a bit of strength there as far as the euro is concerned compared to the dollar. Of course, the bond buying program could get announced on the 6th. Of course, reports are now everywhere about how the ECB plans to intervene in the primary and the secondary markets. What do you make of this news? Is this the reason why we're witnessing some strength, or are there other factors at play here?
Well, a couple of things. First off, we've been saying this together over the last few weeks as far as that upcoming meeting on the 6th. I'm thinking that what's going to happen, they're going to have to bail them out. There's no worries as far as Bernanke's thoughts coming out of last weekend, and he's saying that there's possible another round of QE3, or another round to make it QE3. We've seen a very strong rise in the price of gold and silver in the last couple of weeks, and I think that what you're going to see is possibly more bond auctions, and possibly further help for those indebted nations.
What about the dollar? Of course, we've seen the ISM number for manufacturing coming in much below expectations, thereby sparking off a debate that the US Federal Reserve could announce QE3 the way economic readings are. Maybe they have no other option but to announce a QE3. Do you think announcement could actually see some action on the dollar, or perhaps the dollar is already factoring in or capturing most of the upside?
I think the dollar's probably already factored in. I think what we're going to see coming out of the 6th is just going to be very interesting, because Bernanke's already laid his hand. He's told us what he's prepared to do, and I think he'll do that prior to the election. I've got a funny feeling that they're not going to wait. They're 60 days out from the election. Pardon me, and I wouldn't be surprised if they do something sooner than later. As far as the ECB is concerned, those headlines haven't gone away as far as Italy, Spain, Portugal and Greece. We've got that indebted side of it, and the only way to flush it out is to probably, you can do two things. Don't do anything, or put some quantitative easing in there into Europe, and I think that's going to be the path forward. So I think you're going to see a continual, at the short term, uptick for the euro, but in the next week or two, or the next 2 weeks, it could be continued downside.
Right. Peter, just one quick question. How would these stimulus measures, whether it's the ECB or the Fed, impact emerging markets, whether it's the currencies of emerging markets or emerging markets in particular? Do you think appetite for riskier assets could go up, thereby propping up equities, commodities, or even currencies for that matter?
Well, I take your point, and I think that there's a chance you could, but I'm looking at the Shanghai Composite, and it's now at that 2,000 level. I think you're probably going to see possibility of cracking 1,900 to the downside. You've had a fall off dramatically in the price of iron ore, and the consumption over there in China is certainly waning a little bit. So let's just wait and see. But I think that we've just got to get over the next probably couple of weeks to get a clear understanding what's going on from ECB and Fed, and then those emerging markets will get a better picture as far as, for the months ahead.